Hey there, and welcome to Real Investment News. I'm Mike O'Neill. The closing bell has sounded and the Dow has set a new record. It's up another 80 points. The S&P actually closed a little bit lower today, down 1.26 points, and the NASDAQ actually climbed 0.2%. Now, there were two big events between most of today's climb because for the most part, the markets were up for it. There was, of course, the hike in interest rates. That announcement was made right around here this afternoon, around 1 o'clock this afternoon. As expected, the Fed raised it by 25 bips to a range of 1.25 to 1.5%. Now, this was the third hike of the year, but the Fed also increased the economic growth forecast for 2018 from 2.1 to 2.5%. So there was some good news there. The other reason for the big jump was when Republicans announced that the House and Senate leaders had reached a deal on tax reform, and that caused this big spike earlier in the day, a couple of hours earlier, but they didn't release any details immediately, so the enthusiasm began to wane. Democrats are now calling for a delay to the vote on the tax bill now that Alabama has elected Democrat Doug Jones to the Senate, which would narrow the Republican majority. Nonpartisan scorekeepers still have to tally the cost, and as we told you on Monday, the Treasury Department said the $1.5 trillion drop in revenue would be paid for by growth in the economy. But when you take a look at this chart, you can see that pretty much every other analyst said it's just going to add at least $1 trillion to the deficit. And there is yet one more statistic that should give people pause: the real average hourly earnings. Take a look here. Now, the Bureau of Labor Statistics says it dropped 0.2% from October to November. Now, the folks at Zero Hedge noted that this is the fourth month in a row that the average has dropped, something that hasn't happened since 2009, back when the bull market began. And the reason? Wages are still stagnating, but inflation has not. And that's because the growth in the economy is not as big as you might think. Now, the headlines all say we have a 2.43% growth, but when you consider that contributions from energy investment are about to slow down now that the price of oil has peaked and it's starting to drop again, growth for the past 2 years has actually been slowing closer to 1.03%. Hey, that's it for today. Thank you so very much for watching. Please remember to follow us on Facebook and Twitter. Subscribe to our YouTube page. I'm Mike O'Neill, and we will see you in the morning.